Good afternoon, everybody. Welcome to Trader Merlin Show for your second consecutive day of massive market declines. Huge losses yet again, second day in a row. I think yesterday we had $2.5 trillion loss today. Right around the same ballpark. So we're looking at almost $5 trillion in market cap loss this week. Pretty damn crazy. I hope you guys are on the spinning wheel. I just did a speed test and everything's running, but now all of a sudden it looks like I have a spinning wheel on your end. So hopefully we don't start Friday out with bad stuff. Anyway, let's dive into it right away. I didn't have a chance to do a lot of graphic support here today. Main reason is I've been doing just a ton of recording. Here is the, nope, that's my Twitter page. What? Something's like, oh, I know what happened. There we go. My buttons got switched around. There we go. So here is the graphic I chose for today, which is just this, appalling chart falling off a cliff. But really, the graphic of the day is this here. I mean, well, just let that sink in. Granted, we have been selling off for the better part of a month now. And I'll go from the peak here we had on March 19th all the way, February 19th all the way to our low point today. So all in all, that move equates to about 17.72% slide in the S&P in exactly 32 trading sessions. Now, considering that there's 5 trading sessions per week, you're looking at about 20 per month. So we got about a month and a half here of sell-off that's caused a 20% slide in the market. And today, I mean, if you want to see panic, to just witness it with your eyes, that's it. Now, yesterday we had the gap down, and that was a 50% of the sell-off was the gap down on the open, and then it continued to sell off most of the day. Today was different because it felt like we had a little bit of goodness. I mean, it felt like we started to see a little support just briefly, and then the bottom fell out, and it just kept on going down and down and down and down all day. Really ugly, especially the way it closed. Of course, China, when I say bounce, I was referencing this open part here where it just started to rally up a little bit. Like, okay, here we go, yeah, and then just melted. Just face melting down move for the equity markets. Not great. In my opinion, as I mentioned yesterday, I do think we're going to continue to see it going south. More pain ahead. Now, the good news for everyone here, this is great news, honestly. When you have a panic moment, when everyone just starts freaking out and it's like, oh no, here we go, is it just sheer panic mode, sometimes you just need to pause things, right? You just hit pause, let it calm down for a second, then you realize it's not as bad as you thought it was going to be. And here we go into Friday with the biggest moment of panic we've seen since 2020. Hopefully, when we get through to Sunday night, when those futures markets open back up, calm will have settled a little bit. Now, if you look at the impact, the magnitude of what these tariffs are going to do, or what they may do, I think that there's a good chance that it's going to continue down, maybe with not as much aggressive sell-off. But I saw a rumor of that. Saba says I saw Vietnam is lifting their tariffs on the U.S. products. I saw a rumor of that. I didn't see confirmation of that yet, Saba. But as I mentioned yesterday, right away, it's kind of funny how things fell into place in line with my statements yesterday. What did I say? I said the United States is the bully, and we're going to bully people into making this work. The smaller countries, Vietnam, I mentioned, I'm pretty sure they're going to cave right away, right? They'll cave right away. Now, I also said that there are countries that we can have a much harder time bullying, and that was China. And what did they do? They flipped up. Volume's much higher today. Bizarre. Not sure why, Les. My levels popped the same. China with the reciprocal tariff of 34%. Ouch. And that's basically China saying, you're not going to push us around. Cool, Memon. And I think we're going to get, I didn't mention Israel yesterday. I said Mexico, Vietnam, Canada, especially Canada and Mexico. I think it's really critical for us to remove those tariffs and be at peace with them again. Hopefully we can get back to being peace with Canada. It's hard. I can't imagine them hating us like it seems like it's being portrayed in the media. It's the big players that will either resist or go, exactly, Gary. That's exactly what's going to happen. And China basically said, we're not going to go for it. Now, let's focus on the stuff that's going to be the big obstacles here for you and I and for everyone else that's playing this market game. I'm not worried about the Vietnamese ones. I'm not worried about Thailand. Canada, Mexico, I think that's going to get resolved fairly quickly. China is going to be the big stick in the mud, and I think that's going to be really difficult. Because what will happen is, Trump is a bit of a hothead. That's neither it's just a personality trait. He's a bit of a hothead. And I'm pretty sure that because China jumped up 34% tariffs, he's going to get his knickers in a bunch. He's going to be all upset about that one. And he'll probably say something this weekend to the tune of, if you're going to do that, then we're just going to continue to raise our tariffs and we're going to do 100%, right? And that could be a big factor going into the first part of next week. We'll see if something gets resolved over the weekend. I do think, see if I'm right on this one again, because I've been wrong quite a bit. I think that over the weekend, some of these countries are going to remove tariffs. And Trump will tout that as a huge victory. And of course, I do think it is to remove tariffs for different countries. But the damage is still in place. And does China cave? Does the EU cave? Those are two very big markets that we may have problems. And I think you'll see other countries this weekend come to the plate with Trump and say, we're going to remove the tariffs. The question isn't for me those small ones, right? I don't really care how Uganda or Uruguay steps up to the plate with regards to tariffs. It's Europe, it's China, it's our big consumers, Japan, right? Those ones are really important. If they do play hardball, then I think you might see another third day of nothing but red out there, unfortunately. Now, there were some interesting developments for trades that I was in. Surprisingly, with my long-term accounts, even though SMCI tanked and NVIDIA tanked, I had a very nice positive day because of Super Micro Computer. So I love that. Thank you, Super Micro, for making my Friday a saving grace. Let's see, really quickly, I'm going to read through your comments here. Tariffing the planet, what could possibly go wrong? Exactly, Gary. I mentioned this yesterday. It's not a global war. When we think of like a world war, we think of conflict and bullets and weapons and death. Here it's just economic bullets, financial weapons. So I'd argue that this is a world war of the financial markets. And who started it? You could say we've been picked on for a long time, and this is just, it all came to a culmination. You poke the bully enough, and all of a sudden he turns around and comes right back at you. So I'm torn on it, whether this is a good thing or a bad thing. Again, as I mentioned many times, it's not my place to say whether I'm for it or against it. There's certainly pieces I do like. However, I am definitely excited about the volatility. I think that you're going to see some monstrous buying opportunities. So, sorry, Steve, if I messed up. No, SMCI was down big today. SMCI was down 7%. Yeah, 7.7% for SMCI. So that's not good. MicroStrategy was the one that was up. MSTR Bitcoin was up, so MicroStrategy was up a bit as well. MicroStrategy at 4.0%, and that's my largest, underlying position. Trent, I'll get to that in a little bit. Let's run through some stuff here, and then we'll talk about Bitcoin and its reaction to it, because it's not that Bitcoin doesn't care. It's, remember, you got to understand what Bitcoin isn't an entity. It is an item. It's a commodity. So not that Bitcoin doesn't care. It's that people are finding a place for their money. We talked about this yesterday. I think it was Lisa or Liz said, well, where's the money going? If it's flooding out of these markets today, and as you can see here, if I bring up that S&P 500, clearly we're going for risk off, right? They're going for risk off. Risk on means you're going for volatile instruments. You're looking for market gains. Nasdaq down 6% today. S&P down 5.9. Russell down 4.3. Only Bitcoin and the dollar index rallying. But look at the yield on the 10-year. The 10-year, this is, we talked about, it, fantastic, right? As Steve says, it's going to cash. Big Ed says it's going into bonds. Big Ed, did you add another B to your name and change your color? What's going on over there? I thought you just had one B. He's doubled it's inflation. Your B is growing. We've mapped this out yesterday, and I thought we would see a bounce in that 10-year. Not only did we not bounce, man, we got a crater moment today. And at one point, well, if you go from this last recent sell-off here, that's a 12% slide in a very short window of time. On the day, the yield had dropped almost 4%. And as I mentioned on yesterday's program, my job as a trader / investor is to say, great, I see this yield tanking. What does that mean for me? How do I make money off of this? And if you're looking for direct correlation, I believe we had a new gentleman who was watching the show yesterday. There you go. A gentleman mentioned yesterday where he's saying, well, how do you make money when you know money is pouring into the bonds? Well, if you see the yield dropping like this, then stocks like TLT or bond funds are going to do rather well. And you've seen some pretty good movement up here in the bond funds over the past week or so, actually a couple months. And I think that will probably continue. So where does this money go? If the money floods out of risk on investments, which is equities historically, it's going to find other places. And there was some guy today on social media. He's got, a couple 100,000 followers. And he's like, we're witnessing the first time ever is the decoupling of Bitcoin in the equity markets. I'm like, really? These social media clowns saying that there's a disconnect. Look, for the longest time, there was anytime there was a down week in the market and Bitcoin is up, people go, oh, it's a disconnect. There's been this talk track that gold and Bitcoin are similar in they're that flight to safety because they're not controlled, they're not manipulated by supply like the dollar is or other fiat currencies. So, no, Steve, I did not block them. The decoupling, I would argue, is not really something that's new and unique about it. There is this belief that if you have an inflationary environment, that Bitcoin is an inflationary hedge. Now, we don't really get inflationary data till next week. I believe it's Thursday and Friday we get our CPI and our PPI numbers, which will give us clear indication as to what that Fed may do. And we talked yesterday about the troubles that the Fed is facing because the long end of the yield curve is falling aggressively, and they're keeping that short end of the yield curve high. What are we going to do? You're going to get an inverted yield curve yet again. So let's go look at that real quick since we're on that topic. Here is your yield curve, and notice this is the 10 and the 1. Market looks at the 10 and the 2. So here we are with the 10-year versus the 2-year. This is the typical numbers they look for the yield curve. And right now, you're a normal yield curve. I'd argue rather flat, but you get about 0.35% more if you buy 10-year bonds versus a 2-year. If you look at the 1-year, which Bill Addis, one of my favorites, says this is his market barometer for the yield curve, the 10 and the 1, you're barely getting a premium right now. It's 0.13%. So it's been drifting lower and lower, and as long as that 10-year keeps dropping and the short end of that yield curve stays the same, we are very likely going to get an inverted yield curve yet again. We've only been up there a few months, but all of a sudden it looks like we're going to come crashing back down. And again, that's not a good thing. The government and their actions are causing a demand for bonds, right? You create demand for bonds by the market tanking. And this begs the question, and I'm much of a conspiracy theorist, but I have read a few things where people are saying this, that Trump is purposely trying to crash the equity markets so that causes people to take money out of the equity markets, buy bonds. By buying those bonds, the yields are going to come down aggressively, which we've seen happen. And as those yields drop aggressively, the government can now help itself by paying debt back with cheaper dollars. And ultimately, that stimulates more growth because money's cheaper. Now, there's some truth to that those are the results, the cause and the effect. But was it by intent? I don't think that Trump wants to purposely destroy people's equity and gains. I don't think that that's something he's resigned to do, but it could be a direct action here. And this yield curve is not a very positive sign. I think I saw Liz say something, Merlin, have you looked at the CME FedWatch tool? Yeah. It has changed dramatically. So let's real quickly go to that one and look at that Fed funds tool just to see what the markets are saying. Now remember, Jerome Powell, what was it, 2 weeks ago, the FOMC meeting? Jerome Powell I think it was 2 weeks ago, showed the dot plot. And for those that don't know, the dot plot or the SEP, Summary of Economic Projections, kind of alluded to dropping, what is it, was getting back to 3.9%. So right now we're at 4.5%. They said, as a summary of the voting members of the Federal Reserve, they said they think it will be at 3.9% by the end of the year, which is 2+ rate cuts, right? 2. Well, let's see what we've got. Right now, the May 7th meeting here, and this shifted big time today too. This was about a 50-50 coin toss yesterday. So right now there is a 37% chance of a rate cut happening on May 7th and a 62% chance of it staying the same. But it's really the long-term stuff that is interesting to me. Notice now, this entire mountain of bars here that you see has shifted significantly to the left, right? We looked at it the other day and there was like a 30% chance of 2 rate cuts. Right now, there's a 37% chance. The highest probability right now is that by December 10th of this year, we will have experienced 4 rate cuts. 4 rate cuts. Remember, Jerome Powell has already said we might see 2. That's the consensus. So what's caused this? Economic turmoil, right? The misconception that a lot of your friends may have who are not involved in the markets is that the Fed's job is to bail out the markets and save the market. That's not what the Fed's job is. And I was teaching a class this morning where I drew out a diagram explaining stagflation and that conundrum of growth, inflation, and unemployment. If the Fed cuts this much, guys, here's your trivia question for the day, right? It's a multiple parters. Don't type it in the chat yet, but I got about 100 people in here. I want 100 answers. I want to see this screen fly by because you should all understand this very, very clearly. Right now, we have a situation where tariffs are being applied to just about every country out there, right? Reciprocal tariffs. It's an aggressive stance, and that causes goods and services to rise in price, right? If Nike can't get those shoes from Vietnam, they're going to find them somewhere else, has much more expensive labor. They're going to pay that tariff. They're going to pass it on to the consumer. Your $100 Nikes just went up to about 120, maybe 130 bucks. That is the core root of inflation. All right, great. So how do we fight inflation? Well, the people are betting right now that the Fed is going to cut rates aggressively to help stimulate market growth. But if they cut rates aggressively, it stimulates inflation. So you already have natural inflation because of the tariffs, and you're going to have even more inflation if you put this. What is going to happen to the rate of inflation if they do cut 4 times? What happens to inflation if the Fed decides to cut 4 times by December and all these other tariff pieces stay in place? Guys, you're looking at cost of goods and service. Yeah, and I love that you did all caps with a ton of up, skyrocket. It's like, it is a, oh my God kind of moment. Like, I don't want to be the doom and gloom guy, but like, do you get to that point where you have 16% inflation like the 80s? We don't know the impacts of these tariffs yet. And likely a lot of it will be settled, and that should calm some things down. But if China keeps playing hardball and the U.S. keeps playing hardball, it'll, at least it says, it will exacerbate inflation. And I feel like I was wrong on my forecast for the year because I thought we'd have an up first quarter, up Q1, flat Q2, and then said third and fourth quarter down. I still stand by the third and fourth quarter down, and I think that maybe even more aggressively based off of these pieces. And none of us here would want to have Jerome Powell's job. I wouldn't mind for the paycheck. I wouldn't mind in that. But this is could be pretty crazy. If we saw 4 rate cuts by the end of the year, I don't think this is going to happen. I would bet that it's not going to happen. They can't. If they cut 4 times, Jerome Powell knows that inflation is going to surge way beyond what it should, especially with the tariffs. And that would be against their mandate. Their job is to keep stable pricing. Now, obviously, the actions by the president and his administration are going to have a huge impact on pricing. As I mentioned yesterday, he's probably Jerome Powell's probably holding his head going, why? Why'd you do this to me? It's my job to worry about stable prices, and you just jacked everything up. Well, to be fair, Trump did say that we are going to experience some pain for a while. And I think a lot of people now watching the outrage on social media, it's like, well, a lot of you voted for that. So, you got to just take what comes the way. This is what's going to be part of our 4-year cycle here. All right. But if there was a recession and no money in pocket, then even with money, people won't spend. Correct, Ganesh. And that's another factor to this puzzle of how are we going to get growth? How does the U.S. sustain or get GDP up to 3% like we'd like to have if we aren't shipping our goods and services internationally because of tariffs? You have layoffs are probably going to come. I think most of us agree that if this cycle stays in place of more tariffs, less goods being sold, companies will slow down. They'll go back to bare bones to go to survival mode, and that means layoffs, and that means less spending. So there is that spiral really, kind of looks like this. I feel like there's that little spiral going down of wealth and money kind of losing value. It's an evaporation week here. So it's a good point, Ganesh. Let's see what else I got. If Vietnam goes to zero tariff, it might bring Nike prices down. Right. Well, not that it would bring them down. It would keep Nike's shoe prices where they're at, right? So if Nike is getting 50% of their shoes from Vietnam and all those tariffs go away, then Nike will be right back in the same position they were before, cost-wise. And that's a good point. If Vietnam says, hey, we're removing tariffs, then that means that the cost for Nike gets better, and you look at NKE, then maybe this is a buy point. And you can see the bump here that Nike had today, 3%. They were down as of yesterday or the last 2 days. At one point you're down 35% in 27 days. Brutal, right? Absolutely brutal. Oh, good. I got good conversations going here. Powell said we're not in a 1970s style moment. Well, not yet. And I agree with that, Andres. We are definitely in a different market environment. Yeah, we're definitely in a different market environment. And every generation, every era will have to figure out how to deal with things. And by the way, I apologize. Cheers, everybody. I'm so fired up today on what's happening in these markets, I didn't even take a sip. So happy Friday, everyone. I know that this was painful for some of you. I hope that a lot of you capitalized on this through shorts. I've definitely made some mistakes this week, which just chapped my hide, but cheers, anyone. Yeah, getting out of my short position was brutal. I played the bounce. I was correct, but then it just fell apart. Man, those puts I had would have been a tremendous winner at this point, especially in that last few days. Got to quit second-guessing myself. Let's see what else. Big Eb says, I think the panic over tariffs on 2.6 trillion of goods may be overdone. Global GDP is about 115 trillion. Yeah, it may be done. I think what you're going to get are bounces up when amendments are made, when people come to the table and negotiate. The big uncertainty is China. China is in an economic position where they can play hardball with us too, right? That's the problem. Like I said, the problem is not Vietnam. Vietnam's dropping the bucket, easy to work with, right? For Vietnam to lose the amount of business that they may lose because of tariffs, it's economically crippling. So they'll make that one easy, no problem. Besides, what do you think Vietnam's going to import from us? Are they going to import electronics when they can just make them over there at cheaper cost? So it's not like, we don't export that much to Vietnam. All right. Oliver, I like it. Yeah, Liberation Day, meaning a buying opportunity in the market. Well, look at some of these levels. Another trade I had on, which it's funny if you follow the TikTok account, they asked me well, would you put trades in there, which I hate doing. I was talking about this pattern here, this double top formation on XLE, which I did make a trade on, and I had just a day trade out of it, which is small, nice little winner. That was back when we were up around 70 or $93, and here we're down at $78. Energy absolutely getting decimated from the peak we had just 3 days ago to where we closed at today. Dead lows down 16%. Ouch! Ay. Does that mean energy is a screaming buy right now? It could be. And I think that if you have dry powder, if you've got some capital freed up, I think that you might want to look a portion of it, a small piece of it, and look at a buying opportunity in some of these markets. The problem is, I don't think this is done. I think we're going to get next week big bounces up and down. I think you're going to get some people get that Goldilocks moment where man, I get to buy a market that's down 10, 20% and catch a bounce. But it depends if the overwhelming global fear is high enough to keep pushing it down. And I think that it is. So I would certainly not go all in buying a bunch of stuff right now. Let's see. Ganesh says, even if tariff is removed, the biggest is trust. Will EU continue to trade as usual with the United States before? Will companies invest with so many policy changes? And again, Ganesh, what does that present to you and I and our governments? Uncertainty. Which is the worst word you can say in trading is uncertainty. So, yeah, with all of this, from an economic perspective, I would say we should remove the tariffs. It makes sense. But you're right, Ganesh. Our goodwill and our long-standing relationships with some of these other countries could be deteriorated significantly, especially like Canada. They're our neighbor to the north. You kind of want to be friends with your next-door neighbors. I have parties at my place all the time. Not all the time, but at my house, I like to have social gatherings. Who do you think the first people I tell about my social gatherings are? and I'm very polite to them, and I'm very nice, and I always invite them because I want to be friends with my neighbors. My neighbor to the left, my neighbor to the right, and I've got 3 neighbors along the back that share a common fence. They're always invited, and I do everything in my power, even though one of them I can't stand. I still am very friendly with them, right? You maintain that relationship with your neighbors. That's the way it should be. Well, you now pissed off the Canadians and the Mexicans. That's not a good thing. So we will see how this all shakes out. We all have our opinions on good, bad, indifferent. Time will tell how it ultimately works out, but man, it's been crazy. We can't keep kicking problems with our... I get it. I think Elon Musk is correct 100% when he says if the U.S. continues to do what it's doing, it will go bankrupt. I think that's an absolute fact. I don't think anyone can refute that. The only reason it won't go bankrupt is because they print the money, so they'll keep bailing themselves out. They're the perpetual bailout. So let's fix it. Oh, Tofi, you gotta go hang out with your neighbors. Maybe you're just in a quiet neighborhood. Exactly, Margaret. Can you cook? Then cook a big barbecue or dinner or something. It'll be good times. So that is your major piece. The good news for all of us is there is some stuff happening next week, which I think is either going to accelerate this problem or exacerbate it. I don't think it's going to be a calming effect, and that is going to be inflationary data, which is going to happen on Thursday with CPI numbers first. Right now, the expectation is that consumer price index is going to fall. And I just was really surprised at that. I don't think it's going to fall. We're currently at 0.2% on CPI. I'll bring the chart up here for you guys. And we'll talk about this next week, but I figured why not just dive into it now. Here is your CPI data. You can see right now we're at 0.2, and they're expecting to drop to 0.1. So CPI doesn't look that bad. I would say anything under 0.5 will be okay. Right, 0.5, annualize that. That's a little higher than they want, but ideally they want to be at 0.2. So anything around there I think will be okay. What's the lag time? Yeah, a month from the report, Steve. Yeah, it's a month lag. And I know where you're going with it. Exactly where I was going to go with it too is, yeah, a lot of stuff has happened, but it hasn't hit the CPI data yet. Those inflationary pressures, or same thing with the unemployment numbers of all these government layoffs. That hasn't hit. That's going to be on next month's unemployment numbers report. So do a poll of, all right, let's do a poll. I'm curious. Let's see. Who will remove all tariffs first? Of course, we'll throw China on there. China. Let's go EU. Let's go Japan. And then, let's see, who's the big one that we're doing? China, Japan. I'm trying to think of who might be a pretty big partner or trading partner. I'm gonna go Mexico. Canada's already kind of hinted that they would, so let's remove them. Let's go Mexico. MEXIC. And if you think other ones, go ahead and throw them in the chat. But there's your poll. There's your poll for that one. I like that. Good idea. Great poll. I like the idea for polls. Let's see. Now I can't read underneath the poll. It's Dwight. How do you know what is working and what isn't since you've done so many actions at one time? Right, Dwight. That's my point about trading plans. You can't change so many things at once. Everyone will point the finger at what they believe is working, what isn't. So let's just fast forward to next week. Let's say we do get Vietnam comes to the table and says, we're removing all tariffs. And Canada says, we're removing all tariffs. And China raises again. The talk track won't be, the narrative from Trump won't be that China raised, right? He will glorify his victories and say, Canada's really reasonable. They're really smart people. The government of Canada, we really love them. No one knows Canada better than I do. They have come to the table and they've removed tariffs. See, that's what we need. And so has Vietnam, right? These are good people. They're not the stupid people like the Chinese, right? He'll say something insulting to rile, kick the hornet's nest. But ultimately, he'll edify the wins. How do we know the impact of each one of those? I don't know, man. That's a really complex puzzle. It's a really, in my opinion, it's a very complex puzzle with so many moving parts. I think it's going to be difficult to figure out which is the most impactful, both positive and negative, for our economy. I think that the Chinese market, if we could resolve China's tariff wars with us and get that calmed down, then I think the market's soar. If China calms down and they say, we're not going to tariff you, that's fine. I mean, we import more from them anyway. So we're their biggest, they export most stuff to us. So would they rather lose that or have the United States tariff it aggressively and maybe lose a ton of business? I think if they came to the table, these markets are going to have a giant day. Double-digit up day for Nasdaq, S&P, Russell, Dow, if that is alleviated instantly. But I don't think that's going to happen. We'll see. Yep, he will, Gary. Yeah, I agree. He's not going to back down on this one. The fact that China did 34% on us today, I saw that and I was like, oh, no. No. You're basically antagonizing a bully, and he's going to come back with harder tariffs for sure. Black market goods and knockoffs will boom. Yeah, depending on the country. Yeah, Dwight, we don't do that much import-export with the UK. Not as much as some of these other countries. All right, so I'm going to close the poll here, see what we said. Only 41 of you voted? Come on, click a dang button. It's not that hard to do. You know what, Chris? Let me work on my ELO one. You have to sound really aloof. Like, the guy's brilliant. I think he's a very brilliant man. I think he's very intelligent, but he's a horrible public speaker. So I have to he does a lot of that. So I'll work on his stammer a bit because that's his style. Let's see. Hey, Laurie, welcome. Hope you had a good session in there. Yung Wang says, I don't think Canada is lifting tariffs. Not yet. I think they will. And, if you look at the impact on Canada's economy versus the U.S. economy in a trade war, we're literally like a mosquito bite. It doesn't bother. Canada is not that big of an impact on the U.S. economy. That's just the numbers are fact. Yet we impact Canada significantly. So I think Canada will make concessions. Like, okay, yeah, we're going to remove tariffs. And then hopefully we just have great relationship with Canada and continue to move forward. So you guys have Mexico in here. There we go. I've spurred some people. I got 54. I got half of you have voted. I'm going to end the poll, though, anyway. End the poll. So here's the end poll for you. Most of you saying Mexico. I think it's in Mexico's best interest to settle and just say, all right, no tariffs, that's fine. So 52% said Mexico, Japan 21%, EU 18%, and China 7%. I'll tell you, if I was one of those other countries, I would find myself probably pressuring my citizens to, let's remove tariffs. Let's remove tariffs. We need the business. All right, what does Steve say? Problem is China can be self-sustained as well and currently is way closer to self-sufficient than we are. I think we're self-sufficient. We would have some problems, I think, when it came to some electronics and costs. But, yeah, they are an independent. Yeah, they're closest to us. I think China will play hardball. Topi says, NAFTA will become TAFTA. That will be pretty funny. No great relation. Damage is done. Remember the bully in school? Did you ever come around to liking them? Nope. I remember well. Sadly, when you leave high school, you should do whatever it happened. But there was one bully in particular who was just the most mean, evil kid to me. It was just ridiculous. And, yeah, bad things happened to him, and I just never really felt remorseful for what happened to this poor guy. All right. Exactly. I still hate that guy. What else do I have for you today? So, the question they're all wondering is what's next. My guess is this week will be more volatility than normal. This week was just predominantly down, right? Just bloodletting as far as the market goes. I think you're going to get volatile bounces next week. Trade tariff pieces and settlement being the main one with renegotiations. And then the other variable here, we talked about inflation, CPI, and PPI coming out Thursday, Friday. And then Friday is a huge day as well because you have the opening of earnings season. You have JP Morgan, Wells Fargo, I think Bank of America, BlackRock, Bank of New York, all reporting earnings on Friday. And that might be the breath of fresh air that the markets are looking for, a distraction from this chaos that's overwhelming our markets right now. However, as you guys undoubtedly know, that if those numbers don't come out and paint a rosy picture of when things were good, then that could really cause further sell-off for the market. And we talked about this market hitting a 20% down move for the S&P 500. I didn't think we were going to get there right away. I thought there might be a few weeks away. I mean, I did think we were going to get there, but I thought it'd be a few weeks away. We are from present levels. Let me go to where we closed at today to our 20% mark, 2.83%. Hold on. Let me fix that. That's not right. We are 3.5% away. Holy cow. 3% away, 3.5% away from being 20% down for the year. That is pretty crazy. Again, I had drawn out earlier, I think we'll have a drift down towards this recession box we drew this one out a while ago, talking about how I don't think we'll see recession numbers start to hit until like July of this year. And man, it looks like we're heading there very, very quickly and closely. I might have to move this box to the left, get back into May or June, right? Yeah, Jeff, 20%. Crazy. And at that point, I will probably look to buy some. I'll probably do maybe buying something outright and selling covered calls against it. And I'll certainly be selling some puts and collecting premium because the pain will be really high at that moment. Ganesh says, from the highs, we are already down 20% in the S&P. No, we're not. We're not, Ganesh. You go here, go to the SPX. You want to go broad market indexes and go from our peak, like dead high, to where we're at right now. We're down 17%. So we're not down 20% on the S&P, which is the market. Now, if you want to look at let's go look at your Nasdaq 100. Yeah. From peak to right there to where we are now, 21.7%. So the Nasdaq certainly is now in bear territory, but it's not, to me, the important one. The important is the S&P. Well, let's look at the Dow. Let's go to, I think I had diamonds on here. Here, Dow Jones Industrial Average, just so we can have that number. And this is a little bit misleading because if you guys notice, that high point is actually, well, I'll do it from this peak right here. And then we'll go to where we are today. Obviously, even the Dow is not immune to this. Down almost 15%, so better there. And then the Russell, well, the Russell is well past that. Let's go to the rut here. Where's my rut? There's, I was looking for IWM. And going from the peak, which we had back here in November, why is my line all messed up? We are right at 27% down now. 27%, crazy. The CNN Fear Greed Index is at 4. Do you remember ever seeing it at that level? No, Mike, but the main reason is I never watch CNN. I don't watch Fox. I don't watch Bloomberg. I don't watch any news source, so I wouldn't have seen it. But, I mean, that's got to be pretty low. And as I saw the question came up here, let's look at VIX. Now, please don't jump at this chart and say, oh, I got to buy. But we talked about this yesterday, right? The historical textbook utilization of the VIX, which is the volatility index, which measures the quantity of puts versus calls. It just tells you that everybody and their mother was trying to buy puts today. So VIX at 45. When it's above 40, that's in theory where you should be looking for buying opportunities. Remember, the mantra is when VIX is high, time to buy. When VIX is low, time to go. When it's low, it means get out of your long positions because it's about to turn. When it's high, it means that there's been a big panic sell and things are tanking. So that's right. Got to label those lines. Well, Margaret, the concern I have in labeling these lines, like I really was thinking of not labeling them. And the reason is I don't want people to look at this and think, oh, well, now Merlin is saying now's the time to buy. I am not saying that. I think that it might be a time to buy, but I think there's still more pain ahead. I think the markets are going to continue to sell off going forward. So right now, do you buy immediately? I don't think so. Are there great opportunities? Heck yeah. Look at the Magnificent Seven, folks. Tesla down 10% today. Take Tesla, tank. I love Tesla. I want to buy it sub 180. Bring it on. I love it. It's 180. NVIDIA. I am now holding more NVIDIA, right? I had the 100 strikes on NVIDIA. I could have closed those out today, but I'm fine. Not only did I get NVIDIA today, but I sold the 100 calls against it before we closed today. So I already have next week's call options written at 100. Fine. 7.3% slide for NVIDIA off of its peak going back to January of this year. Peak to bottom, NVIDIA down 39% for a company that's going to deliver the entire AI infrastructure and backbone of the world. Okay, I'm buying that. Looks good to me. Do I look at Apple, who had another 7% slide today? I mean, Apple in 67 days is down almost 30%. Yeah, buy the dip. You're buy the drip. Your name's perfect for today, right? It's just, if you do, you've got to know two things. Two things you have to know if you're buying right now. Number one, you're getting things at a good discount. 20% off, 30% off, that's great. Does that mean that sale is done? Could Apple go from 27% down today? Could it go to 40% over the next 3 weeks? Yeah, it could. So you got to ask yourself, are you comfortable holding it at these levels? Are you okay holding your positions or owning something that could go down even more? Which is why I said earlier, I think it would be good is buy something that you're a believer in, right? I'm a believer in NVIDIA. I'm a believer in Tesla. Therefore, me buying NVIDIA at $100, cool. I'll continue to sell cover calls, lower my cost basis as we go. Do I expect NVIDIA to rally back up to 150, 160 the next week? No. Do I think it's going to slowly drift down? Possibly. And I'll continue to sell calls against that. But it's a solid company providing a unique product in the industry, which is going to be impacted by tariffs, that's for sure. If I look at another company here, Amazon, one of my personal favorites. I love Amazon. I may be adding some Amazon to my portfolio. If you go from peak to bottom, Amazon's down 31%. Amazon is critical for me. I use Amazon every single day, whether I'm watching TV, whether I'm buying goods and services, listening to music. I use Amazon all the time. As Chris says, nibble, nibble, nibble. Yeah, it's just you got to go with what you're comfortable with. I feel okay knowing I'm buying something at a 30% discount. I'm fine with that. Could it go lower? Yes. And that's why you buy a little bit at a moment where you feel comfortable. Like, so for me, I'm okay buying today on some of these markets, even though I think we're going to go lower. I don't know, but I think we are. Therefore, I would go buy maybe a little bit more in a week or two if it continues to fall. Great. Amazon is an absolute juggernaut, and they're getting into more and more things. Imagine the tariff situation gets much worse, and we find ourselves in a very contentious global economic thing. I'm still going to use Amazon to buy goods and services. I may not get that cheap stuff from China, but I'll be getting all this stuff from the U.S. through Amazon. So there you go. Crypto is stable this week. Yes, right? It was kind of odd. I wouldn't say with this week it was stable, but at least it wasn't as much of a meltdown as we saw. So to the point of people asking me, is there specific buying opportunities? Yes, I think that you have some good opportunities here. Let's just look real quickly at these market sectors. I mean, these numbers are atrocious. Financials, energy, down 9% today. I mean, if that's not a buying opportunity, I don't know what it is. Financials were down 7.3%. Off of their high just a couple of weeks ago. I'm trying to get that thing to click right there. We're down 16%. Technology, we know. Industrials, absolutely falling apart, right? As Trump says, it's just this week. It'll, yeah, right. I don't think that's the case. I think we're going to see a deepening of this one. Young Yuan says, the fear is that if the tariff is actually deployed, the big tech companies could really hurt. Yep, absolutely. Yeah, there's no argument for me. If we do see reciprocal tariffs on Taiwan and Taiwan Semiconductor, which is 90+% of all NVIDIA's chips, NVIDIA's going to hit some hard times. Now, how much of a hard time? If the cost of their chips go up by, let's say, 20%, does that warrant a market sell-off of 38%, right? That's the question. I don't know. In my opinion, no. I think that actually it would be okay for NVIDIA. They'll lose a little bit of profit margin. Their profit margins will decline. But everyone will know when they see their fundamentals that the profit margins are impacted because of tariffs. And as long as they show growth and people demanding their servers and stuff, they'll do fine. So, but you're right. We don't know exactly which way it's going to go. What else? We had building materials was on that list. I mean, building materials. This is huge. And maybe we get more domestic construction and infrastructure. We're down 20% on building materials. Utilities, which usually weather the storm very well, this one hasn't done much, right? Utilities are normal for just kind of keeping your even keel, only down 11%. Healthcare. Today was a bloodbath for healthcare, down 5.4%. But going back to its peak here in September to where we are right now, healthcare stocks down 15%. Real estate, I think the real estate could actually have a pretty significant bounce here, and the reason being cheap yields. 14% slide for that, and then consumer discretionary. This one definitely taking a hit. Consumer discretionary since December 2024 to where we are today, down 24%. So there is a lot of buying opportunity. Nibble, nibble, nibble. UNH is the only good thing. I haven't looked at UNH since the shooting. Oh yeah, wow, heck of a week, heck of a month. Fantastic. You're loving that one. You guys remember when that shooting happened? It was right here. And I think I remember the talk track. Someone had asked me, are you going to buy it? And I thought, no, I like it because there's fear and greed in this one where people are just panicking and dumping their shares. But when you have an event like that, a CEO being literally assassinated, it's just too crazy for me. And notice what happened after that. That was when it was at $550, and it's fallen quite a bit since then. So yeah, stay with me. Nice, congrats. Good for you, Steve. It's always nice to have a nice big winner in your portfolio. More red flags in real estate, not touching it. Yeah, I'm not touching it right now either. Yep, so nice, cool. And now you're up nice and positive. I hope you're selling covered calls along the way, making even more rate of return on that bad boy. All right, I'm going to go into wrap-up mode. So really for Monday, you've got nothing on the plate. There's no major economic announcements. There's no major earnings announcements. So it's kind of quiet. It really is a story of what does Trump do over the weekend, right? Not just what does Trump do. Let's not make this one-sided, but what does the world do, right? Are we going to see a lot of this kind of attitude? Look, even Franklin behind him looking a little upset. Is it Franklin Adams? I forget who that one is. I think it's Benjamin Franklin. They kind of have the same sneer, same grumpy face. But I think it'll be all around what Trump does and international actions over the weekend. As I mentioned, I do think that you're going to see some countries step up. By Monday, they'll say, hey, we've removed tariffs. That'll be front page news to make the American people feel warm and fuzzy. But until we get China and the EU to write off on our biggest trading partners, this is still going to be negative pressure for our equity markets going forward. So I do think there is a high probability of more downside, although I do expect to see big bounces next week. Today was just an absolute bloodbath. It took everything in my power not to pull the trigger today. I was actually going to go sell puts on the S&P at that level down here. Let's go SPY. No, I was going to sell them at that 490 strike. And I just decided not to, just to be a little more cautious and careful because I do have some, positions that I'm upside down on right now with MicroStrategy and SMCI and NVIDIA. So I don't want to go too exposed there. But I do think you'll see a lot of volatility next week. And as Gary says, put on your helmets and strap in. Yeah, buckle up. Buckle up and go more defensive than aggressive. If you see a huge market spike down, could be an opportunity for buying. Just be very careful about what you buy. Michael Anthony, who's not here today, before I wrap up, let me just go to this. So Michael sent in multiple questions yesterday that I did not get to answer. I literally copied them and put them in a Word document. And this is a total change of course here conversation-wise, but check this out. We know, Michael, if you're here, I'm going to pick on you a little bit. My apologies, but I'm going to pick on you a little bit. Michael has a type of stock, and it usually has a chart that looks like a ski jump, where it's just been at these incredibly lofty prices and is now just evaporated and garbage at this point price-wise. 90% of the trades you've ever mentioned on this show have been nothing but this down-sloping line. I mean, you guys might remember Siri. That was one of his big ones. All right, so here's your Sirius XM or Sirius Satellite, whatever this damn thing is. That looks awful. They're terrible, and it never going anywhere. It's penny stock, right? So he brought up this one, and I got to, let's go, PFE, Pfizer. Before I bring that up, let's look at, he says 6 insiders bought over $1 million each at $25 last week on Pfizer, which he's been getting, $13,000 in dividends per year. The reason I bought Pfizer is it's getting new drugs approved at a faster pace, 43-cent dividend. They got $6 billion in cash. And all those things you've mentioned are good. They're good, right? You've got insiders buying. That does not mean that this company is turning around or going up. I've seen countless times where insiders are buying, trying to prop up their share price and create demand for it. So I don't trust insiders. Number two, I'm going to trust your numbers. $6 billion in cash. Great. Awesome. 43-cent dividend. I don't care. For me, dividends are irrelevant. I don't care for dividends. Dividends don't do it for me. I want to see the underlying grow. Grow or sell off grow. I want premium of gains, not dividends. So I don't look at dividend stocks. Now, here's the thing. And as Chris just typed into chat, the chart says everything. And 100%. Look, Pfizer might be a great company. Historically, they have been a great company. But since 2022, this has been a giant mound of dog do. It's down, hold on, Pfizer right now is down 63% in the last 829 days. So last, call it 2.5 years. I don't see this changing. Now, at some point, the value of Pfizer is going to be good enough that they could actually buy it for book value. Okay. Now, what I say by that is, why you're not a fan of dividends? Because I'm not concerned with income streams. I want capital growth. So I'm more in the more volatile securities. They're going to have growth. Remember, typically, if a stock pays a dividend, hold on. Let me take a step back here for Alexander. This is a great question. If a company is growing and we're seeing them get bigger and bigger and bigger, and they make money, what should they be doing with the money? Type in a chat. If a company's making money and they're really accelerating their growth, what should they do with that profit that they've earned? Should they give it to you as a shareholder or reinvest it? Right? They reinvest it. You put it back into the company and you reinvest it. If you make $1, so most of you saying reinvest it. Yep. Invest it in themselves and grow more. Here's why they pay dividends. They've earned money. Let's say they've earned $1. They have a choice. We can take that $1, we can put it into infrastructure, R&D, development, and make $1.50 out of it. Or I can take that $1 and give it to my shareholders. The first one is about a company growing and going up in value. The second option, which is pay the dividend, is the company actually acknowledging that we don't have great growth. So we're going to take what profit we do have and pay people to hold our shares. We're literally buying investors. We're enticing you to buy our shares because by themselves, they're not good enough. Look at it. You can, let's go here to Pfizer. I'm going to go to the financials here. And they pay a 7% dividend per year. 7% dividend, right? Okay, that's great. I love it. 7% dividend. Yeah, baby, let's go. Okay, let's go back the last 365 days and see what the price of this stock was a year ago. So let's, what are we at? April 7th? We're April 4th today. Okay, April 4th, you made 7% dividend, yet your share price is down 13.79%. You're great, you're down 6%. But I collected a dividend. I'm making money. No, you're losing money. Why would you want a dividend of something that's dying? Now, not all companies that pay dividends are dropping, right? So anyway, I hope that comes across. Maybe not too much of a jerk, but look, as long as the price stays the same, then okay, fine. Get your 7.5% dividend or 7% dividend, whatever it was. That's great. And ideally what you want to do, and this is the point I'm trying to make here, Pfizer, if Michael is correct, and they do have new drugs in the pipeline and things are looking rosy, then at some point this may be a great buy because not only are you going to get that next wave of growth because of a new drug, but you're also collecting the dividend. So right now you're catching a falling knife, right? Pfizer looks like garbage right now. Garbage. Maybe it's all the Viagra knockoffs out there killing their business. Maybe they need a little financial Viagra of their own. It looks terrible. So at some point, Pfizer will be a good buy. Now, one other thing to keep in mind here, and I'm going to jump over to finance real quick. I want to look at their book value because there is a concept called book value, which is basically what the company is worth if you sold off all the assets. That's book value. So let me go here and bring up the book value for Pfizer because it's got to be getting close, right? You're at $22. That's way down there. So how do we find this stuff out? Well, you go to Yahoo Finance. You type in Pfizer, PFE. Hello. Why are you not bringing up Pfizer? That's bizarre. PFE. There it is. Okay. But you really need to reinvest the dividends to get anywhere. I agree. So let's go there. Now we'll go to statistics. And I'm looking for book value, right? And that's down here. Book value per share is $15.56. So at some point, if it gets to $15.56, that basically means that the company is worth just its assets alone. Just the assets of the company. We're not quite there yet. We're still at $22.97 on Pfizer. So, but even if it got down to $15, I gotta say it's probably a buy because they could sell the assets and still get that amount per share. So, anyway, great question, Alexander. That's why I'm not a fan of dividends. I'd rather find a growth stock that I'm looking at a price chart that's going to give me either upside or downside opportunity, and I'll get a better rate of return than I would off some dividends. Oh boy, here we go. I knew I shouldn't have said the Viagra thing. I knew it was coming, guys. So you're saying sell Pfizer puts at 15? If you can get enough premium at $15, why not? But got to be careful. There's always that risk that it keeps on going lower. In theory, if they declare bankruptcy, then they would sell and you'd be getting $15 per share, but that's not usually the way it works when they go into bankruptcy. But I can't imagine Pfizer going bankrupt. Too many products out there. So anyway, sorry, Michael Anthony, you weren't here today, but I did cover it. So if you watch the recording, hopefully you will get your questions answered. All right, that's going to do it. 3 minutes to spare. Thank you guys so much. Cheers. I hope you all have a fantastic weekend. I know your portfolios probably took a hit this week just because some of that was just so from left field. Others of you capitalized on it, had some nice gains for the week, shorten it. Congrats to you. I hope you all have a fun, great weekend. If you have something you want me to discuss next week, email me, tradermerlin@gmail.com, or put a comment down below any of the YouTube videos. Thank you guys. Have a fantastic weekend. I will see you all on Monday. Take care.